Thank you, Kim. It's a delight to be here. I was supposed to be here 2 hours earlier, but being on American Airlines was not, I needed the private jet that Louis Navellier used to have, right, Louis?
That's right.
And why don't you have your private jet anymore? Are you not doing well in the markets? What's the situation?
No, I had an audit from the IRS. It was 5 years. And they, at the end, announced that I can't land where I have a home. So I have a home here in Florida and one in Reno, Nevada. So I could take off and expense the plane, I just couldn't land where I have a home. So we wrote a big check for what they said we were commuting on the plane. And we had to get rid of the planes. So, because we couldn't expense them fully. So, I also, on CNBC, said that Obama was the best gun salesman on the planet, and the IRS showed up the next day. So there might have been a political agenda, too, okay?
Yes.
A little reminder not to say certain things.
To be right when the government is wrong can be quite dangerous.
Yes.
That's a quote from the Maxims of Wall Street, so beware. So I did want to thank Kim for that generous offer of 50 complimentary copies of the Maxims of Wall Street. So if you come to exhibit booth 715, I will, at the break, right after this Q&A session, come into the exhibit hall in 715, and I'll be glad to autograph up to 50 copies. After 50 copies, it's $20 for the first copy, and all additional copies $10 each, because it does make a great gift item. And in fact, I should tell you that I went to Wiley. Wiley is you're published by Wiley. So Wiley is known as the financial publisher, and they publish classics. And they published my books as well. So I went to them and I said, listen, I've compiled these sayings on Wall Street, the Maxims of Wall Street. Would you like to publish it? And they said, oh, Mr. Skousen, I'm sorry, but quote books and gift books don't sell. Well, 5 editions and 25,000 copies later, I think I proved them wrong. So anyway, one of the quotes that might be appropriate for this group is one by Admiral Nelson. I don't know how many of you know Admiral Nelson, the British the British admiral, who said, to win in war, you have to be bold and daring. And Louis, isn't that your strategy? I mean, how else can you beat the market 3-1? That's what it says in the right. I don't know if it's true or not, but this is what we've heard. So you have to be bold and daring. You can't just buy an index fund and beat the market, correct?
That's correct. I'm actually trained in indexing. I'm from Berkeley, California, and I actually built index funds when I was young and dumb. But in Berkeley, they train you in socialism, and they teach us that if we try to out-earn our neighbors, we will create social unrest. And but anyway, so I learned I was lied to, and my goal is just to beat the market. And all our research is online, free now, in the public domain, and we're very, very proud of how we rank things. But it's not that hard. You just have to have better sales, earnings, institutional accumulation than the other stocks. The other thing that's interesting is stocks that tend to do the best have growing dividends. They tend to aggressively buy their stock back. Last year was the biggest year for stock buybacks ever recorded. And of course, they didn't tell you that on TV, by the way. Okay, so it's not that tough. We just stack the odds in our favor and buy the creme de la creme.
So let's turn to Thomas Grimes. And Tom, you're with Reeves Asset Management, and with a particular focus on infrastructure.
Correct.
So we've been talking about infrastructure investments for some time. We are hopeful that President Trump's agenda, he says that he wants to support, and the Democrats and Republicans can get together on infrastructure investing, yet we continue to wait for that $1 trillion infrastructure investment. Why is there such a delay? And do you think now that some of these infrastructure stocks have been beaten down, maybe it's a good opportunity to buy? What do you think?
Well, first, Mark, let me explain the type of infrastructure stocks that we invest in at Reeves. For those of you who don't know Reeves, we're not as well known as the Fidelities and the BlackRocks, but we have been in business since 1961, and we've been managing equity portfolios for institutional and individual clients since 1978. So we have a 41-year track record managing stocks. What's unique about what we do is that we just stick to a few sectors. And infrastructure to us is utility stocks, energy stocks, and communication stocks. We began our history in investing in communication stocks before the breakup of AT&T in 1984, when there was just AT&T and GTE and a few independent phone companies. And once AT&T spun off the Bells, we made a big bet on the baby Bells. And hopefully many of you in this room have had the good fortune to have owned those stocks and held them for a long time, because they did very well from 1984 through 1999, and they were a big help to our returns. Just using those three infrastructure sectors, and I'll answer your question about Trump and Congress in a second, but our focus is invest in what you know and understand. And I think it's a great lesson for everyone. You come to a conference like this, and there's many others, and you can turn on the TV or go on the internet and find thousands and thousands of opinions and ideas about where to invest. We have a very simple maxim. Maybe we put this in your next edition.
Yeah, let's hear it. Writing it down as we speak. 6th edition.
When you limit yourself to just a few things that you know and understand, you take away the risk that you're going to chase whatever the hot thing is at the time. And that's where many of us, and I've done it myself in my own portfolio in the past, less so now that I have all this stuff up here.
That's better than what I got.
But we have to come to work every day and say, what's the best utility stocks we can own, even if everybody on Wall Street and on TV and in the newspapers is saying this is not the time to own utility stocks. And the same thing with energy, and the same thing with communications. And just using those three sectors, owning no technology, no healthcare, no financials, none of the other hot sectors of the last 20 years, we've actually outperformed the S&P 500 over our 41-year history by over 100 basis points per year, net of all our fees. So you can make money in what's characterized as dull, boring areas if you have a focus and you have people whose sole objective is to come in and find the best well-run companies in those sectors. And just the last point on infrastructure, a lot of the infrastructure, I think, is geared more towards crumbling roads and bridges. We're hoping there'll be some private partnerships in the utility industry, in the energy sector, where the government maybe puts forward some incentives or some hard cash, and then you get private companies, they may be publicly traded, but I mean the private sector versus the government sector, who can do the right things with this money instead of just us digging holes and filling them back in.
Well, it is, I think, one of the reasons the infrastructure bill has never really gotten going is because we're facing a $1 trillion deficit next year, and a lot of the infrastructure is going to require deficit financing. Private sector partnerships would be a great way to go to avoid that, but it just seems like this Congress, whether Republican or Democrat, is hell-bent on breaking the bank when it comes to overspending. So let's talk with Stephen Schork with the Schork Report.
Yes.
And that's a daily report on the energy industry. So let me ask you a question that I think you would be interested in discussing, and that is the Green New Deal. The Green New Deal by Alexandria Ocasio-Castro, which I, fair enough, Castro rather than Cortez, right? Anyway, she gets publicity all the time and says that within 12 years, we're going to have no fossil fuel production at all. So as an energy expert, I'm sure you commented on this crazy idea, but tell us, is the fossil fuel area, is the non-renewable energy sector in a secular decline?
Absolutely not. We have to keep in mind that anytime we want to talk about green, and I don't care if we're talking about the wind, or if we want to use tidal energy, or if the Democrats want to burn tofu, that anytime we say green energy, it is nothing but a euphemism for natural gas. Natural gas is the driver of the economy. It is the cleanest burning hydrocarbon. It is the cheapest commodity to get out of the ground.
Stephen,
right
now wait a minute, I got to stop you there. Cheapest is right, because I just read a report in the Wall Street Journal that they're giving away natural gas because of all the oil through fracking. So it's down to zero in some areas?
Well, actually, they're paying to give it away, but they're really not paying to give it away. It is a victim of its own success. We have to keep in mind, and capitalism, yay, because 12 years ago, the best and the brightest in our industry were telling us that North America was running out of natural gas, that Iran was going to be at the center, along with Qatar, of forming the new OPEC for natural gas. And inside of 12 years, we're going from North America's running out of natural gas to we don't have enough markets for natural gas. So to your point, yes, we are in a perpetual bear market given that because of liquids rich. The type of oil that we are taking out of West Texas has a lot of gas. It's called associated gas. So when you pull that oil out of the ground in Texas, you're getting a lot of gas on the ground. And to your point, you can actually go to NASA and look at a site, a picture of North America at night, and you'll see parts of North Dakota and parts of West Texas that are as big as Los Angeles and New York City in the light that's being shown off there. But that's not light, that is gas being flared. They don't have a market yet to get that gas to market, so they're just burning it into the atmosphere. So the investment opportunity, and this is what we do at the Schork Report, it's a daily note that has been in publication now. This is my 15th year of writing it, and our clientele range from the people that are pulling the molecules out of the ground, the people that are transporting it. We put together mathematical models to help hedge and to help make trading decisions. So right now, natural gas, it's a wonderful opportunity because I love buying a commodity that is zero, but when we look at what the government is doing to the market as a whole, saying, I want more green, you're a utility, you have to be more green, what the government is telling you is you have to burn more natural gas. So we're in the process of inventing this demand. We have the supply, we're creating the demand centers right now for gas.
So, Louis, looks like your man Elon Musk is Tesla testing your patience? You were quite down on Tesla the last time we talked at Freedom Fest, and or actually it was at the Money Show, I believe. The Money Show, that luncheon that we had, and you created quite a stir by telling everyone that they're not just burning gas, they're burning money. And yet, the stock is holding up fairly well. So what say you?
Well, we're publishing something tomorrow that it's probably the greatest short in our lifetime, but and I don't normally short stocks, but what it is Tesla has so many problems that I can't even name them all, but my friend did run the automation at the Reno battery plant, and 8% of the batteries were bad at one time, and he quit. And they're having similar problems with the Gigafactory in Buffalo. So they got a lot of people quitting. You probably know they curtailed the production of the S and the Model X. The biggest problem Tesla's going to have is next year Volkswagen Group will be making more electric cars than them. And so you can buy an Audi truck now for $74,000. It's electric. You can go online and order it right now. And that's approximately 55% of the price of the Tesla truck. You can buy an Audi sedan later next year. It's all electric, beautiful car. It was in the Super Bowl. You can buy a Porsche sedan. It's going to be beautiful. It'll come out next following year. So
does it have the sex appeal of a Tesla?
no, it has. They're actually more sexy. They're better looking. They're quality, and they don't catch on fire. It's a very sad story, but the German
The natural gas.
the German versions of these cars will not have what they call the ludicrous mode, because when you turn on the Tesla ludicrous mode, you not only overheat your batteries, you damage them. And there's been a lot of cases of Teslas catching on fire, and I'm sad to say, since I saw you, my daughter had 2 classmates die, burned alive,
No way.
in high school down here in Fort Lauderdale in a Model S. Her boyfriend actually got the guy out of the back seat. NTSB's all over it. The cars are dangerous, okay? And it goes back to the problem that 8% of the batteries coming out of Reno were bad. So they're down to the Model 3. It's a beautiful looking car, but it has quality problems. And versus Mercedes, Volkswagen, Jaguar, or Volvo, these people know how to make cars. There's 12 aluminum parts in a Tesla Model 3 fender. Most cars have 3 or less. It is not designed right, okay? And he's not going to make it. Saudi Arabia, who owned 4.9% of the stock, has hedged the entire investment. They don't believe in him anymore. Remember, he said they were going to take them private. He has executives fleeing like crazy. Stanford University asked him to stop mentioning their name because he attended Stanford briefly. He never graduated. I think he dropped out. But anyway, he's a flim-flam man, and he has a nice rocket, and the rocket's doing okay, but we don't think the cars can compete within a year.
Yeah, it'd be interesting to see how the market plays this, because I see it as a short also, but it's trying our patience in terms of what investors think about something like that. I assume both of you feel similar. I mean, this is a stock that's a company that's losing money, tremendous amounts, millions of dollars every year. In fact, they've never had a profitable quarter, really, to speak of. And so you kind of wonder if it's all basically from government support that they're able to follow this dream. Absolutely. And, the politicians who see this Green New Deal, I mean, it's just crazy. But I've spent 5 months out of the year living in California, and you see how they've imposed certain rules. Europe I believe some countries have actually said that within a certain number of years, all cars have to be electric, even though electric can create just as much carbon monoxide as anything, through the production of the batteries and all of that sort of thing.
Well, yeah, absolutely. I mean, anecdotally, as far as government subsidies, we replaced our SUV, our household. We got a hybrid, the Porsche Cayenne, electric hybrid. Loved the car. We get a blended mileage of 45 miles to the gallon. Didn't want to go full electric because I'm not there. I've got range anxiety, but the technology's there. But the only reason why I bought that and not a regular Cayenne was because of the government kickback. That sealed the deal for me. But now you take away these government kickbacks, and we saw it with Denmark. Denmark, a year ago, was the first country in Europe to pull back the subsidy. And when you look at the sales of EVs in Europe, you have everything going like this, and then Denmark down like this at this point. So it is demand by government fiat. So it is an issue. This is something we do have to recognize it. I'm all for it. To your point, that the Porsche all-electric coming out next year, what they're saying about Tesla is that if everyone who has put in an inquiry about the Porsche, if that comes to fruition, Porsche will sell out their EVs in their first year, and 60% of those questions are coming from current Tesla owners. So clearly is the wave of the future, and hence why you have to love the BTU that creates the generation, and that is natural gas.
Tom, I want to change the subject a little bit back to telecommunications, and there has been a real revolution in that whole area. I'm going to talk tomorrow in my workshop called the Flying 5 Strategy, which is buying the 5 highest yielding, lowest price stocks on the Dow. And it's worked really fabulously. We've done very well with it, and I'll be talking about that tomorrow, 11:15, if anyone wants to attend that. But Verizon is one of our Flying 5 stocks, and despite very negative news, it seems, about a lot of these companies, the stock is up pretty substantially. Are you optimistic about companies like Verizon and AT&T, these large telecommunications companies, or Sprint, or what's your favorites?
Of the ones you mentioned,
Yeah.
Verizon, we think, is the best managed and has the greatest likelihood of being able to sustain and slowly grow its dividend in the future. Our general approach in investing in these sectors where most people come for income is we are total return investors. So we want to start with a certain dividend yield when we buy a stock. We want to have a high confidence that the earnings can grow and the dividend can grow for a long period of time. And what we've found, yes, if you buy high-yielding stocks that are high-yielding because they've been beaten up for some reason, that's a strategy that's worked, the dogs of the Dow, that type of thing. But we've actually found investing in the lowest yielding utility stocks that are the best managed and have the most headroom to grow their dividend outperform the higher yielding, slower growing stocks. It's something that has really been our edge in investing in this
Do
sector
you want to give a
for 40 years.
specific example of that, or do you want that
Sure.
to come to
Well,
a workshop or something?
I'm sure many people in this room and at this conference own the stock. NextEra Energy, which owns Florida Power and Light, is number one. Now the large.
Not PG&E, though.
I can tell you a story about that too. But it's a great contrast between the two because Florida Power and Light, owned by NextEra Energy, ticker symbol NEE, is the biggest cap stock in the S&P, utility stock in the S&P 500, and it's been the best performer by far the last 5 to 10 years. And the reason is it operates, number one, in a state with terrific demographics, population's growing, people are coming to Florida. Number two, they have a great relationship with the state regulators. And going back to infrastructure, Florida Power and Light has spent billions of dollars over the last 10 years to do things like storm hardening and also to protect the security of the network. So when we had that incredible hurricane that hit almost the entire state a couple years ago, they had 95% of people back on within 2 to 3 days, which before they had spent these billions, that would have never happened. And the reason they were able to spend the billions and earn a return on it, which helped grow their earnings and grow their dividend and grow their stock price, is because the regulators recognized the need for this spending. And going back to natural gas, because natural gas prices have come down so low, the costs to run their plants and keep the electricity flowing has come down. So there wasn't a lot of upward pressure on rates. That's the best environment you want for utility stock. The regulators are happy because rates are going up just a little bit with inflation. The company's spending to make the whole system better and more reliable. The customers aren't calling them and complaining. And then a good management team can keep growing the business, stick to their knitting. That's what we look for.
All right, Tom, thank you very much. We're out of time, but before we go, we must ask Louis your views. The two hottest sectors in the last couple of years, which is going to be the best performer in the future? Cryptocurrencies, pot stocks. Your call. Marijuana, going to get high on marijuana or on the cryptocurrencies?
The pot stock, well, no, the crypto, well, we're still trying to find the guy that died that has the crypto exchange in Canada. So crypto's flamed out. Yeah, but anyway, if you do need to launder money and you live in Venezuela or Zimbabwe, you know, you might want to briefly do crypto via PayPal, but get it back into dollars as fast as you can. But the pot industry is very interesting. I got mad at CNBC because there was a pot ETF out there called Alternative Harvest. And it was trading at a very large premium. And on average, it trades at a 30 to 32% premium every time you buy it. So as soon as you buy it, that means you just lost 30 to 32%.
Crypto, the Bitcoin one was similar, that trust.
Yeah.
Yeah, similar.
So what's happened is there's more money selling a pot ETF than there is in selling pot now. Do you know what I mean? Because it's 30% a day. And somebody brought this up on CNBC and they had a commercial break. Because, you know, they sponsor ETFs and stuff. So I haven't gone on since. And I got so disgusted, you know, and no,
There's an oversupply of stocks in this area.
Yes. And I'm originally from Berkeley, California, so I know a little bit more about pot than I should. But I do know 3 people that have jumped off bridges from pot, not from other drugs, and they're not alive, okay? So it's pretty strong stuff, and we don't recommend it unless you need that CBD oil for your joints. And so we'll see what happens. But I would not invest in it at this moment. So.
Well, we thank you all. I know it's been a very long day. We now have a break in the exhibit hall, a reception. Please come by my booth at 715 if you want to